Recording in progress.
Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, February the 1st, 2023. What a day. What a day. I just have to say I had some fun today. And I'm not even sure where to start because I'm watching Meta as they reported today, and I thought, wow, that they're really going to have to outdo Jerome Powell and the Fed, and sure enough, they did. They had a little something up their sleeve, and now I'm going to tell you what it was, and then we'll go on to what the Fed did. Metaverse reported 175 versus, I think expectations were $2 and plus something. But here's what they did do. Then they announced that they have a $40 billion stock buyback, and kaboom, the stock is up almost $30. So anybody that's like been waiting that they want to get out of this stock, Metaverse is just giving you the golden opportunity to do so. So you can go sell the stock to them, they'll buy it back from you. And that's what I think people are now doing. They want to participate. I don't know. To me, it's just like, okay, how are you going to outdo and produce a rally on earnings that missed? Now, granted, the company's still making size money. And they do talk a little bit. I saw a little bit in their prepared statements from the CFO. They are looking forward to saying, well, we probably aren't going to make our estimates of what we gave for full year. And so they knocked those down a little bit. But then when you put that $40 billion buyback on, man alive, watch the stock go. Now, who knows what Apple, Amazon, or Google have in their back pocket, because maybe they're going to find they've lined up some financing somewhere, they're taking a loan, and now going to spend their money to buy back the stock. We know that Apple's done it before. Let's see. I don't know. It's going to get interesting from here, folks. It's going to get interesting because often in the type of wave pattern that we're in, where we are within that wave pattern, what we were looking for today, what we were looking for all along is now coming through in it totally. Now, prior to this, we had the Fed came in on target. That's exactly what the world was expecting. Everybody thought, nope, we're all wrong. And we're going to tell the Fed, you can only do 25. They conceded and did just that. But then Jerome Powell did come out, was basically hawkish, talking about the inflation is not controlled yet. We're working. We're going to continue to go up the good fight, et cetera, et cetera, et cetera. But it was basically a hawkish press conference. But the market, I'm going to tell you, about 2 minutes after he started to talk, all of these asset managers, the CTAs or whomever, whatever you want to call them, they had their buy orders stacked, and they moved in and moved the NASDAQ from the low, which was 120.53, to the high above 12,500. Now, impressive. But from that high, the market immediately in 15 minutes trimmed off $100, trimmed off 100 points. Then Meta comes out. Good old Meta announced a stock buyback. Yahoo, Mountain Dew, this thing skyrockets right back up to the high. Now, I'm just finding this very interesting, and you can't see me because I don't want to be on camera right now, but I got a big old smile on my face because I'm just like, how more can we try to, I don't want to use the word manipulate, but to me, that's just exactly what I feel like it is. And we didn't get a great outlook moving forward, folks. But I'm telling you, we still got room to the upside. Now that we know what the Fed's deal is, and we know the Fed, they're going to continue to raise rates. They had, say, 1 minute, they did not even inkling. They didn't give us an inkling that they're going to pivot. In fact, it was the opposite. We're going to continue. We foresee for the foreseeable future, we see raising rates. And they will go from meeting to meeting to determine the size of that. They admit that employment costs are not really in line with what their expectations are. They admit that the job market is pretty tight. They admit that things are not looking that good in that factor in terms of like they need to get inflation down to their target at 2%, which they are holding to. Now, I'm watching all this. And I'm like, okay, yeah, well, that all fits. Okay, I'm glad to hear it. And then they just start to buy it, and it was straight up. Now, that's the fun part. I have to tell you, that's the fun part. Now, those of you that are in my trade room, you know that I didn't start off trading that very well because I thought, okay, he's speaking hawkish, we should get hawkish. But those asset managers, whoever schedules out all those orders, had them stacked and then just push the button and let it go. So I kind of got caught in that. But I want to tell you, because of the severity or the strength that they were showing, you just got out and turned around and bought it. And you made all of it back and then ended up strongly on the day, just like the market. So that's why I'm smiling, because it's like, as a trader, when you get a day like this and they're doing what they were doing, a total absence of sellers. Total. There weren't any. Downtick here or there. And all that was, in my mind, was in one of those component stocks, somebody was hedging. Maybe, they just sold a bunch of puts and they're hedging it by selling the stock. That's all. And so it was interesting to watch. I'm glad I had the trade room folks there, because they could see what goes on. You could see how can you trade this? What do you want to do? But outside of that, it fits in the count perfectly. In fact, as I was talking yesterday and even over the Monday, these remain the expectations. And I put the 4 in, I'm looking for the 5. And then I thought, well, we're kind of, it's got to just go and it's got to take off. In fact, when I was telling my trade room today and others that if it begins, it can't stop. It just has to march up, march higher. So what have we done? Well, right now you can see they're still trading. We got another 25 minutes before that closes. We've gotten to 12,534. 24. Now that's pretty high, considering that low, just before it started, was 12,055. Amazing. It was an amazing move. The NASDAQ was down and finished higher. The Dow was down 300 plus and finished up. The S&P was down. Now the number's eluding me, but it was down pretty strong and ended up. So what we're seeing is pretty incredible. Even the bond market decided, okay, we're going to resume our counter trend rally against this thing of what the Fed is saying. They got to get it done. They're going to go. And they did. So everything kind of is coming in. Even gold jumped on board and went, okay. Closes up $22. So everything just picks up where they needed to go, and then now moving there. Gold, I've been talking about, and if you listen to my the podcast, and I talk about gold, I said, I think that our next stop in gold is 2,000. And then new all-time highs for gold. Well, we're up 20, and it's still trading. So they're up 22. We're at 1967. So we're chugging right along. Bond market. Now, in the 30-year, we're heading towards 132. That was the last time it kind of got stuck there, but actually it gets stuck just below 133. So this time it's like you're going to have to go and break it. That's what I'm now going to look for. I'm believing that this is what's up next. The market. I have 12,600 as topside for the C wave. That's where it will equal the A wave. And let me just take a peek. Let's just take a peek. And it's already above. Remember, I was thinking, it's like, wow, maybe it'll end in a failure. I don't know. But if it doesn't, it's got to just go up and get there. Sure enough, it did. C needed to go up and break the top of wave A, which is 12,343. Well, I'm looking here when it was sitting at 12,055, 12,100. I'm like, well, maybe that's not going to happen. Boom, turn it and go. It's like, oh, your wish is my command. That's what it felt like. Now, what we got going on here is there's still, let me bring it back down to that hourly chart. There's still additional upside to do, right? We're inside the wave 5, sub-minute, and it's a minute wave 5 to finish the minor C wave to finish the intermediate wave 2. And I don't care if you want to call it a WXYZ, whatever you want to call it, it's still going to go up there. That's the projection, right? So whatever we're calling it, that's where I think it goes. And now we have more room above 12,613 because of what Meta did. You think they're not going to come in here and start scooping up that stock so they could sell it back to them? It's incredible. It's incredible how things can get so twisted up. Like, oh, good, happy days are here again, stuff like that. So what we got is a lot of people that just are believing, now going to walk right into that. But let's stay what we might want to call sober about all of this. That yes, we have what I'm going to say is irrational exuberance. Some of you are going to complain about that. Some of you are going to tell me I'm crazy. But I want you to know, I did trade it today. I did trade it from the long side. I did make sweet money. So before you think I'm going out talking about a crash and all the rest of this noise, please listen to the whole thing. I'm also saying, yeah, we still have additional upside to do. But my experience, which is over 40 years in trading the markets, also tells me nothing goes straight up forever. And we're not in a new bull market. And we still have tons of problems economically, geopolitically, globally. We don't operate in a vacuum anymore, folks. We're part of the global economy. That's still very, very real. And that is where the surprise is going to come from. Obviously not here, because they just totally dismissed anything that Powell said today. Yeah, you're going to cut, you're going to pivot. Oh, we're into that now. Look, we got all this stuff going on. It's a new bull market, right? Okay, fine, come on in. But remember, in my view, it's a finishing move. It's a finishing move with the next one being pretty severe. Now, again, I'm going to go over this. If it's going to be my alternate count, which exactly, we're still pretty far away from that. So here are some numbers that we got. And then first, let me just talk about if this is the B wave, a primary B wave, and we do end up here, glory be, play it. I'm going to tell you right now, I will. I am not telling anybody that we're going to crash. I'm not telling anybody that you need to be short this market. No way. Everybody gets to make their own decisions. I'm going to telling you, I don't trade with the directional bias. I will be playing what's in front of me, and I will catch these moves up or down. And that's the beauty of being a day trader. So back to this. If I look at this and I have to pull this primary A over to here, which is going to change all of this into intermediate wave A, intermediate wave B, we're in an intermediate C wave up, still projects up into here. That then exceeds that high, which as an intermediate wave 2, it cannot. So it cannot exceed 13,741 and still be called an intermediate second wave. That's all. That's all the differences here. And should it do that, again, people, if you're playing it and you're positioning yourself and you think, oh no, we got to crash, think again. Put on different types of positions. Know when to get out of your position. Know when to maybe turn your position, because you got to get up and live and trade another day. So if you're going to come in and try to play this market and you see that it's turning, don't fight it. Go with it. There are several ways to do it. Now, again, I will not switch my count and bring over the alternate, moving this over, until we get up here and get ready to break 13,741. That's when it becomes invalidated. Then, and somebody, please don't tell me, it's like, well, you say that it's still going to go down. It's like, yes, I don't care if it gets up to here, it's still going to go down. If it gets up to here, it's still going to turn and flip. If it gets up to here, it's still going to turn and flip. Primary wave B will be followed by primary wave C, and that is down. And you can go and try to decide, well, what's going to do that? Just like we had to decide, well, what's going to do this? It just happens, folks. The reasons come in after. And I got people tell me, oh, yeah, I'm doing great. I've been long, blah, 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 forever. I was like, I think that's great. I love hearing about that. I love hearing about people that make money in the market. I'm not really caring how you did it. You worked out your trade, you entered your trade, you monitored your trade, you got out of your trade, you made a ton of money. Great. So don't misunderstand what I'm doing and what I'm presenting. I'm presenting a wave count and according to what I see and what the market is telling me. So on that basis, we continue to look at these fibs. So let me take it off of the daily, which, by the way, we still right now, let me open this up on the daily. You see, we just today broke and closed above in high fashion, but you're now going to see what that break of that 200, which held us for 1, 2, 3 days, finally that break, and if they were going to do it and try to get it up higher, that's what they needed to do. So they just stacked all the orders together and did it. I don't know if you want to call it whatever you want to call it, but that's how it had to get, because they had to close it up there to make sure they get the follow through that they're going to need. And that may or may not come, by the way. I have no guarantees. The market doesn't provide any. Back down to that hourly chart, and let's just take a peek. Oh, first of all, sorry, I wanted to go to the 4 so I can give you the rest of these resistance. So the next fib resistance is 12,613. We're 108 points away from that. Oh, excuse me, 105 points away from that. And they're still going after Meta into the bell. Well, we got 14 minutes before that extra hour closes. And let's see, where's Meta? Yeah. Meta's going to be up $30. It forces the short squeeze, so there's a lot of people that they don't have any choice. They got to buy because of the options that they have, because of other things that they have. They got to buy. And so it's like not like Yahoo! It's like crap. So we don't have any idea like why people are doing what they're doing and why they're still trying to cover. Maybe they have to. So it's not happy days are here again for everybody, let's just say. But this isn't the time where you kind of go, wow, the bears are getting crushed. I don't really care. People trade what people trade, and they trade the way that they trade, and that's their decision. We all trade according to what we believe, and that's our decision individually. I don't need to hear from somebody telling me, it's like, well, I told you so. It's like, no, you didn't tell me anything. I traded it. I made my money. Hopefully you did too. Back at the ranch, what we got going on is 12,613. That's where wave C would be equal to wave A. But we know that it can go above that. And what would be our next level? Unfortunately, we're talking up here. So granted, now what I can add to this, and I'm going to come back down here so I can get it correct on the hourly. Now let's take a look at wave 5. Let's look at our extensions and see where we come in. And then what I'm going to do is go from there to there to there. So we already surpassed that. Our next up is 613 to 650. Then what we got? 618 at 12,833. Wave 5 being 618 of wave 3, most common. That's a very common level. Now, I gave this before. I have talked about this before. And I've said it is a common. At the time, because we were down here, I thought, I don't know if I'd be expecting that. But now that we've done this, with now staring right in the face tomorrow, the trifecta of earnings. All right, tomorrow we have Apple, Amazon, and Google. Trifecta. If they come out like Meta did, and I can tell you, I have no idea, any one of them can announce a stock buyback. Apple's done it before. I don't know if Amazon has. I don't remember if they have. I don't think Google has. Doesn't mean they can't. Right? But Meta reported fairly good from their ad sales. But again, folks, let's remember, 2022 is what they're reporting that those ad sales on. We are expected to move into a recession. I don't think that's changed. I don't think that, if I listen to Jerome Powell, that the idea that the inflation is gone is not true. It isn't. And he said it several times in his press conference. So what happens then? Well, we're buying those earnings and we're buying the forward guidance. Is forward guidance a guarantee? No. So here we are. Irrational exuberance? Maybe. Just got to have? Maybe. Short covering? Likely. So, when you put it all together, it's like, just trade. Just trade. I don't really need to know the who, what, where, when, or how. I just need to trade what's in front of me. And as long as the market's going to tell me this is where we're going, then you can play. So I think we still have, as I've counted now on the hourly, if you look, my sub-minute wave 1, sub-minute wave 2, this is sub-minute wave 3. And isn't that what a wave 3 should look like? Absolutely. That just happened all in one day. What a turn higher. In fact, it happened in 2 hours. It happened from 2 o'clock to 4 o'clock. 2 hours. We get this wave 3. Very impressive. Very impressive. Similar to that day we had the CPI. 0.1% better in the CPI, and the Dow rallied 1,000, and the NASDAQ rallied 500 in a minute. Awesome. That is still the number one. This is pretty close, but it took 2 hours. Now, so we still got we got a fourth wave to do. And if I had my druthers, I could say, where would that fourth wave come in? I have to tell you, it's certainly not going to come. I don't have anything to match it against. The fourth wave of 1 lesser degree is over here. No, and that's even 1 lesser degree. Excuse me, I take that back. I don't have anything. So I can give you straight fibs. So maybe back to the 4. Which is 12,356. And who knows where it'll come to as we inch up higher. We still, we got to close. Then we were open Goldbacks. Then we have the Asian markets. Then we have the European markets all putting in their 2 cents. And don't forget, by the time we get over to Europe and those markets, many of our big banks, big merchant banks, have already shifted orders. They're just going around the globe. This is what you got to do. This is what you guys got to do. And then we don't know what their opinion is going to be on all of this. So again, we have 12,613, 12,650. That's a little bit of a cluster. If we get the wave 4, could wave 5 end there? Sure can. But I tell you the truth, this fib is very dependable in terms of it being, a fib within the relationship of a 5th wave to a 3rd wave. Very dependable. So I think 12,833, based on what the 3rd is doing, is now into the picture. Does that say that's where it's going? No, it isn't. But if I had to give some indications, that's kind of where I'd be looking. Now, you're going to have ones who go, oh, 13,000, it's a done deal. Nothing's a done deal. Trade it if that's what you want to believe, but you don't have to tell us all that what's a done deal and what isn't a done deal. I always let the market. Silly things can happen. And how do I know what's going to happen overnight? I got to be honest with you. How do I know? We got a war going on. We got Russia escalating things in the Ukraine. How do we know what's going to happen overnight? What's their next step? What happened if there's a coup in Russia? What's that going to do? Maybe make everybody bullish. I don't know. There's a lot of things, folks, that can happen to upset this apple cart. So nothing is given. Nothing is cast in stone. Got too much going on. But I will trade it. I will trade it either direction. So, and as I have said, whether this ends up being an intermediate wave 2 completion or a primary B completion, and that ends up somewhere up here, guess what? I know what comes next. And I'll say it again. I don't care from what level it comes, either the intermediate wave 2 level or the primary B level. What comes next is severe, swift, and unexpected. And that will be the decline, either in a primary C wave or an intermediate third wave. The primary C wave will be more destructive than that intermediate third wave, which will be very destructive in and of itself. Now, I don't know when they're going to start. I got a whole bunch of resistance. I got wave patterns that got to be completed. So I'm not putting anything out there to say, oh, start shorting now. But what we have for tomorrow, if we continue, we're still, wherever this ends up and then starts to pull back, that's where the fourth wave will begin from. And again, I'm looking on the hourly chart. I mean, if we break it down and I look at a 15-minute chart, I got a whole bunch of stuff where it's like, oh, yeah, see, they're pulling back. Right there, maybe, but no. See what happens? Nope, up, nope, up. So again, I don't know. But look at how beautiful the 15-minute chart, look how beautiful those moving averages are. They are continuing to point out, and I've been telling you this for the last couple of days. They remained aligned to go up. Kind of butched around here, but they remained in alignment to go up. Pulling it out to the 30. Well, let's open that up again. Clean, 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 all pointing up. The 200 picking up a little bit of an angle there. Let's go out to the hourly, right? Oh, nice. Now, this is way ahead, but this is starting. This is go. This is now turning up. That's turning up stronger. These are getting vertical. Let's go to the daily. Oops, wanted the daily. 4 hours good, but let's go to the daily. We already saw, but look at that. Look at that. Flat. With all of that happening on top of it, it takes a lot to turn this sucker. We got the 4 getting ready to cross the 200. Good news. The 8's not there yet. The 20's farther away. The 50's very far away. Now, that's what's going to happen if on the daily chart, we're going to pronounce this as the new bull market. It's not there yet. Now we got it on the weekly. On the weekly, we got above the 50. Here's the 200, still flat as a pancake. Got above that too. So our longer term, yeah, they're starting to change it around a little bit, but they're not there yet. So I'm not calling anything. So be on the alert. And to be honest with you, I will say this could have been 3, that's 4, and we're in the 5 now. I don't think so. I actually think that maybe within this third, 1, 2, 3, 4, and maybe this is 5 of 3. And now we'll do that larger 4, the sub-minute wave 4, and then the sub-minute wave 5. So I really do feel and expect that we should get to these levels, if not to this level, before all is said and done. Again, remember, tomorrow, trifecta, Apple, Amazon, Google. Okay, over to the S&P. Same count, same boost. Metaverse is not as heavily weighted as some of the other stocks, but still there and contributing. How did we get today? 41.61. Really, where's that marker? Remember, that marker is at 41.80. Now, if I take it on a close basis, let's check it out. We're above. We're way above. But now I'm going to bring it back to the candle. And I'm going to talk about on the hourly chart, what does this all look like? Again, same deal. Here we have minute wave 4. We're looking to a minute wave 5. I have been talking about it. If it's going to go, it's going to go, and it won't stop. Gets above 41.25. Look for it to start to pick up some speed. And we had 40.50, then we had 40.65, and it got almost to it and did not quite make it. That kind of remains a point, a sticking point. Now, same deal. Let's go back. Let me add for this fifth wave. And let's take a look at the S&P and see what we got going on. So we have 41.52, which has been exceeded. Came back down. Now not able to get up. Now is closed. So we're closed, still below it. But our next level is 41.86. And then guess what? Here we are. Nice, huh? We got all this sitting inside. Now, I can put additional on where the third wave could be. But since I think we're almost done with it, I'll wait to see if I can get a 4, and then I can connect 3 to 4 and then get additional levels up in this cluster. But we really now have 41.86, 42.04, 42.12. What do we got upside? 42.35, 42.63. Where can't we cross? Let's go back out and take a peek. 43.26. We can go to 42.63. We can go to 42.97. We can go to 43.17. We just can't break 43.27. So there you have it. If it does, it shifts the S&P narrative over to a primary B wave finishing move. I mean, by the time I have to shift it over because it invalidates this, it's in the C wave to finish this. So no matter what, this count really, in my mind, won't change. This becomes intermediate wave A, intermediate wave B. We're in an intermediate C wave up to finish a primary B wave, if that's what's going to be happening. So it's not like it's going to be, a brand new, see, now we're even going to go further and further. No, I don't think so. I don't think so. So we're going to have to just kind of hang out and just play it as we see it. Now, what we have going on after tomorrow's earnings, we have Friday's expiration. Trust me, these moves wreak havoc in the options. I don't know if you all caught Tesla's act today. Tesla's back above 180. That's just after going there, falling back to like 160, jumping back on all of this stuff today. And again, 200 million shares trade. The place to trade, folks, is Tesla. Tesla is minting money for traders every single day. Play carefully. If you want to play the premium game, do so. Hedge your trades. Put on risk-defined spreads if you need. But Tesla is minting money every single day. Every day for the last couple of weeks. I don't see that stopping because we go from one expiration cycle to the next expiration cycle to the next. And right now, we're on February 3rd, then we got February 10th, then we got the monthly. So this could just roll itself, keep rolling it out until we get that shock to the market that changes the narrative, that changes where premium will be found. Right now, volatility down below 19. Oh, for sure, we're just going up. We're going up. What it really represents, folks, is complacency. Complacency towards we can't go down. We're not going to go down. We're just going to go up. So they buy and they hold. It's the same pattern we've seen many, many times before. Back to here. I continue to like this particular cluster. It fits the bill. It would fit this. We get a little 4 and a 5 take us to there, but we got 42.35, 42.63, 42.97 to 4,300, and it actually pops above to 43.17. Is that possible? Yes. Yes, it is. We have the trifecta earnings tomorrow, and we have an expiration on Friday, and that would be the SPX and the ES. And a lot can happen. Are we heading towards a top? I don't care. Yes. If it's going to be intermediate wave 2 or primary B, yes, we are heading towards that top. We're heading towards a high. Again, there's the break, 43.27. And what would I expect? Well, you know, this would turn into intermediate degree. And so that was an intermediate move. That would have been an intermediate move. And this, we move the primary degree over. Intermediate move. Yeah, can get up there. Yeah, it can break. What happens next? Ba-boom. But I'm going to play it as I should. Now, same thing in the S&P. Everything's lined up. Now you can see the 20 still on a daily basis has not closed above, gotten above the daily 200 EMA. I suspect if we keep going, it will, but the 50 then needs to get up there. So the daily's still not in alignment for everything to go up. It's pretty close, but I mean, they're all pointing higher, but to have it in alignment, as I call it, in the direction, the 200 would have to be on the bottom, and then the 50 and the 20 need to be above it. So we're not there yet on the daily. That's what holds me back from saying, okay, we're just going to go and go. Not there yet. So if it come back down, I'm going to go to the hourly, open it up, boom, lined up to go up. And I don't need to go any further because they're all going to tell me the same story. All lined up. But even on the 30, look, that 200 it's now angling slightly higher, but it's not really moving higher. It's been pretty flat. Same deal. Starting to arc just a little bit more. Just a little bit more. So that's a 15-minute chart. So this one-time big deal. See, again, if I look at my 15-minute chart, folks, I can put the 3 there, and this is the 4, and that maybe is A. This is a B. We come back down to a C, and then zip up. Possible. Got to let the market tell me. Got to let it happen. Because on the hourly chart, you can't see that. So also, take a look at the RSI. We're getting very overbought. So again, good deal, great day. I know some of you had good positions on and were playing this perfectly. And I've already commented back to one subscriber who really came in and he said he felt the S&P would zip up 200 after the Fed announcement. Took a little while. The Fed chair had to get out there and put his 2 cents in, and that's when it started. But guess what? 40.45 to 41.64, not quite 200, but damn good call. And hopefully he traded it. So that's where I'm going to leave it. I'm actually in a good mood, folks. And I think that what we need to do, keep trading. Keep trading. Trade what's in front of you. Don't care about the who, what, where, when, or why. Just trade. Make your money. That's what I'm hoping for everybody. Our next update will be on Thursday, February the 2nd.